Good morning. 3-day weekend. It's over. Happy about that. All right. So, is this impeachment going to stop the Trump rally? I don't think so. I don't think anybody really cares. And, when these news stuff's been going on, things have kind of been a little boring intraday. Things kind of just waiting for news and to come out, what have you. But, looking at things technically, as we always do, of course, we have trends that are up. Weekly trends up, monthly trends up, daily trends up. And, prices recently broke out of a big consolidation. If we go out to a higher time frame, we discussed this in the advisory letter at the end of last year. We're thinking about going into 2020. And, we had a couple of years actually of sideways consolidation, digesting this gain. And the October low created this move higher and breakout, which suggests things are going to keep going higher until something happens. So we just look at this in our black and white objective way of just tracking the trend. And when the trend ends on a lower time frame, and from a longer term perspective, that would have to begin on the daily time frame, which would have to break this low down here, which is pretty far away. So we continue to view pullbacks as viable events. And so this little consolidation that occurred prior to that move up last week, and that was last Thursday, where prices accelerated higher. And then they stalled on Friday. No big deal. They took a rest. And so today we've got a little selling going on, which has made this rounding top, head and shoulders top, however you see it. That broke this neckline now, and that could open up the door to a little bit more downside this morning, since this accelerated move that occurred on Thursday leaves very little support. So there's got a little congestion there, and so a little extra weakness today or this morning, let's say, to confirm at least this short-term weakness this morning, should set up decent. Well, today we don't have zero. I'm thinking Monday, right? Zero day to expiration SPX trades, since today's Tuesday. But this would be a good setup for that, for selling above here. So we'll see how far these drop, if they do, considering for tomorrow. So anyway, repeating, trend is up here. Everything still looks good. And so we may have some shorting opportunities for day trades today with this little bit of weakness. We'll see how far it goes. So as we always do, we mark off our reference points of support and resistance. And clearly now we've got a resistance point here intraday as this broke. So we've got a small area of resistance, which is up there at the high. And we'll see how far this goes to the downside before buyers want to step up again. This would be an obvious point there where prices broke out from. And I believe there's an unfilled gap there, right? So it's right down here, as you can see. I just put the line in the same place. So this would be a downside target, right? That support area. Now, as we always do, we have open-mindedness about, okay, this would be it. But if it got all the way down there, this daily chart would look a little questionable, right? Especially if it closed down there. So from a very bullish point of view, buyers will create support, right? And a not so potent, let's say, reference point, which would be about this area here above 3,300. So we'll see. And that is, give or take, I'm just going to inch that up a little bit as I eyeball this and put that over there, right? Give or take about the middle of this wide range bar. So why do we use multiple time frames? Well, to see trends in multiple time frames, in addition to see what's inside a single bar when we look at a higher time frame. So look, our, just say, I'm going to put this, our starting point, I call it our factory work of interpretation of looking at events, in this case, a wide range bar. And that factory work to guide our bias says that this is a strong bar coming out of a consolidation. And while it creates this void because it's a momentum move, buyers should step up aggressively because of the strength of that bar if it's going to follow through. And we just arbitrarily say, well, if it's about halfway in that bar, that's where it'll stay. Now, if I look inside the bar and I say, is there any reference point for intraday traders? Well, yeah, there is. There's this little shelf. So we've got 2 reference points there. If it breaks this one, we look down to the next one, and so on. Now, that's a pretty large bar. I mean, it's pre-market, but just looking at things from, well, I see this time frame and this is what it's doing. That's a wide range bar from consolidation, which is igniting a move, and it hasn't been able to retrace into the halfway point of that bar. So we're stuck between 2 reference points. One should be stronger since it's a higher time frame, but still as an intraday reference point, well, if it can get back up deeply into this bar, well, then that's going to be confirmation that buyers are just stepping up here and basically saying, to hell with this impeachment thing going on there. The Trump rally is alive and doing well, and everything looks good. So go with it, and we'll see what happens. And we just apply the same thing. Doesn't matter what we're looking at. Right? So looking at the cues, same process. Here you can, put your line there, look over to the left, see what's there, and so on. Right? So one of the concepts that is, let's call it technical analysis 101, right? Which says what is resistance should become support. Right? Everybody's heard that. Well, yes and no. It always typically becomes a self-fulfilling prophecy. But for those of you that want a little deeper insight as to what's actually happening, I've explained it to you on the other chart, and on this one, it's the same. So if someone that's saying, oh, what was resistance, it pulled back here, should become support. Well, if you look inside the green bar, what's directly to the left, you see this congestion over here. And this type of analysis is applicable to all time frames. To where if you said, well, if I was looking at a weekly chart, can I apply that same thinking to a daily chart? Absolutely. Well, every concept is universal. So applying the same thing, excuse me, we just move on to the next market index to see what's going on over there. So the Dow was lagging before, and now it's beginning to lead a little bit. And the same story, right? Wide range bar. What's in the middle of it? 29,130, 29,130-ish, right around here. That little congestion there. What's down below? Same analysis. Now this becomes resistance. There's the wide range bar, right? Wash and repeat. Russell. Right? So here's an example on the daily chart. Right? So I've marked off this high. What was resistance should become support. And people will draw their line across here. Well, what about this? Because that is this on the intraday chart. You see what we're doing here? We're looking what's directly to the left, not beyond what's directly to the left. And we're looking at, in a sense, what's real, right? The moment versus the past. Right? Now, sometimes things explode upward and there's no hesitation whatsoever. But so when you're looking at a time frame like this, these overlapping of these open and closes is what you want to spot. But if you just see that it's a continuous move up, there may be nothing here. So yes, go ahead and look at that because that's what everybody else is looking at. But you know what's really going on in the lower time frame. Oil. kind of flip-flopping around on the support that we've been looking at for a week or so. Came down real hard, is trying to stabilize here. And so I don't know if this is going to hold or not, but clearly there are buyers here. Now, if this could turn into a bottoming tail bar, or on the next day, a red bar ignored, a 180 type reversal, I think oil would be a buy at that point, because there would be enough time building up a current base here that could get prices going back up. Absolutely right. There's a void here because of the way this came down so hard. And now it's been chopping. And so there's the void as I expand that. That's where it started down from. So what you see here is if this could actually get itself turned around. So let's go with this thought of, well, if it's a bottoming tail bar, you'll have this drop and it rallies back up. If it stays down here today, and then tomorrow we see it rally, well, now it's built up a larger base. So the lesson here is that a whole bunch of bars in one time frame, kind of clustered together, can be a big rounding bottom on a smaller time frame. And when they come down like this, and we've got this void, well, that opens up the door to just say, hey, you know what? What if you could even get halfway into that big nasty bar? Well, for short-term traders, that's okay. Maybe it surprises us and it keeps going. Anyway, so that's how to analyze this, look at the time frame, and kind of say, well, someone's looking at, look at that giant nasty bar. Well, sometimes I call this repairing the damage, which is exactly what it's doing, because this looked bearish as hell on the way down. But as it reached support, all of a sudden buyers are stepping up. And do you want to stay in the past? Or do you want to read what is? Bonds still chopping around here, pretty messy. You can see that's a picture of a mess. A lot of overlapping bars, some tails, and so on. So when you do that, you see this, you go to a higher time frame, see if it makes sense. And sure, it makes sense, the location that it's at, but it's taken an awful long time to try and flip up here. So for me, it's just stay away. Gold still looks great. It's just consolidating its gain here. My alerts down here, maybe it's going to go down there. If you remember, I guess it was last week sometime I spoke about the possibility of a lower high, lower low into this area as a buying opportunity. Maybe that's going to happen. We'll see. It's, as I said, it's still consolidating. So it's a watch. My alerts down there. Silver, right, looks like it's going lower, so probably gold's going lower. It's typically the way it is. It's showing a little relative weakness, but anyway, my interest is if I can get it down in this area here with the appropriate confirming setup, which, so let's just say we took these 3 bars after I moved down and put them over here. That would be fine. Right? I'd like that. And the transports. What a monster reversal. And that surprised the hell out of me to see that to some extent, meaning, it gapped down under these bars, and this was a breakout bar. To come back in one day was really the surprise, and to overcome the high. Now it backed off from that, but wow. And that is bullish as hell. And, we've been talking about this trading range forever. And now at the end of the week, we get a wide range bar clearing these highs, which technical analysis 101 says it's going up to this high. And probably it should go beyond, considering over a year of consolidation here. So if it can't bust through there with some authority, something's wrong. So let's see what kind of consolidation goes on here, right? As usual, doesn't really give us any pre-market information, where last week it had that gap down. And I remember saying, wow, this is unusual to see any real movement. And we had, different stocks gapping down within the index, and most of them came back. I don't think JB Hunt did, if I remember correctly. Yeah, that's messy, but like I think CSX came roaring back, right? Gap down. So maybe it needs to consolidate a little bit, but that is one bullish gap reversal day to turn it around like that. And this looks pretty darn good. And you know, the Russell, we said, hey, this should get back up to here and possibly make new highs through this consolidation, and it's working out quite nicely. You know, the Qs, new all-time highs, and it's got that look. You know, if we don't get a day today, a red day closing under this bar, and it could get a red bar ignored, but if we do get that, it is suggestive of a pullback, which wouldn't damage this trend. But this weekly chart certainly has the look of something that's ready to accelerate higher, you know, bar by bar, and become maybe climactic, which would set up, as I wrote in the letter, maybe the timing of all of this sets up with the next ISM report at the beginning of February, because that's been declining and the market's had some nasty reactions to that report coming out being bearish. So I'm kind of ignoring it, obviously, now, but something to keep in mind for the beginning of February when that report comes out. Assuming this thing, if it does push higher, that could be the, you know, the event, the news event that maybe gets things looking a little ugly. Anyway, so a little gap down here, as you can see. You know, we're looking at the ETF now. So same story. How far does it pull back? What does it do here this morning? So on and so forth. And, you know, diamonds, of course, the same story too. So Friday was that slowing momentum day with the little candle body. It was gapping up. Now we're getting the gap down, and candlestick gurus have names for that. Like, I don't know. I think they call it abandoned baby, or I don't know. Anyway, you know, push up, gap up, slowing momentum, gap down, look for a pullback. We don't need to know names. We can read the chart, where's support, and look to the left, so on and so forth, though. All right, guys. Hope that helps. We'll see what today brings. All yours, Dan.
All right, good morning. Hope everyone had a great long weekend. Yeah, we were saying in the letters that, you know, everything looks fantastic, and with the overbought sentiment off the chart, that was the big warning to us. Barrett, your drop down, please. All our opens look totally fine. So I'm not going to even mention them. Let's go right to gappers. RMED here. Wow, that sure got clobbered on the monthly. I mean, it could be bottoming. No pattern right now. Lizzie, I just saw this going by the ticker, and I didn't know. I don't know what they do, but that obviously was a IPO on Friday. Gapping down to all-time lows right now, so that's not good. Yeah, Tesla, look at this monster. That's very bullish. 15-minute chart pre-market. Wow, gapping over. Yeah, it was a 1, 2, 3 on the daily. Not a quality one because they're so darn extended. I was actually have kept this on my list for an M top. Yeah, I mean, you can do a put spread under Thursday's low. Yeah, it might, you know, take a few days to make the M top, so I'm not adverse to that. But the weekly and monthly are too extended for me for a swing long. FXI, I noticed a lot of Chinese stocks getting whacked. So here's their FXI, the ETF, 43.22. That's a big bearish gap. Look, way the heck down here. That's the ugliest gap and then this whole chart right here. Is that, yeah, I know the airline stocks are getting hit. Is that what's whacking so many other things?
This
Or is it,
virus that I think I got, Dan, they call it a viral pneumonia.
wow, that's possible.
I mean, I haven't been sick like this in probably 30 years. For me to be sick for 2 weeks like that is incredible. And I mean, the coughing was, I'm telling you, uncontrollable. It was nasty.
You should have been quarantined.
I haven't left the house.
You probably got people sick on the plane with you, or other
Yeah.
people having the same thing. Remember Boeing here? We were watching Friday morning, and I said if it closes weak, we'd consider a bear put debit spread as a swing, and it just collapsed over the lunch period and into the close. That's damaged. Beyond, I saw in the newspaper it had some good news, maybe some approval with Canada or some, I don't care about. I only read an article if I care about it. Otherwise, I just want to know it's in the news. So 113. This could be a put spread, 30-minute high put spread for Friday maybe. Genghis space is gapping up. Yeah, it is, but it's, we missed it. Tomorrow, MT Live is going to be on entering momentum stocks. And this is a momentum move. It is. And red bar ignored is one concept. But it's for me, it's too extended. It's too far from the 20. And so if you're around tomorrow, sure, we can talk about this one. I mean, I would have, yeah. So yeah, here are the three major airlines gapping down, 28, but no pattern on American, United, 88 and change, no pattern. Delta, this was the strongest one. That was a very bullish gap breakout on earnings and then going sideways. That's still strong. But FNB, did this have earnings? SBNY did have earnings, and this looks great. Yeah, gaming stocks getting whacked too. I know I got Win and LVS. So here's the momentum move, sideways, breakdown, back up. So this one's ready. This looks great. SBNY, I'm gonna put it in a window. But like I said, with earnings, I don't know if we're gonna get a gap. But the setup here, if it opens positive in a gap down market, daily, weekly, monthly, all look great. CMA gapping down here. No great pattern. Halliburton had earnings, was up. Now it's down. Now it's a mess. Ballard, I just saw this one going by the ticker, and I'm like, how did we miss this move? Look at that. Had a gap up and then a 1, 2. Look, there was your entry, the 1, 2, 3. Nothing to the left. Look at that. That's a core trade. We got to watch that on a pullback. That was a no-brainer entry on the 1, 2, 3, or even 30-minute high on the gap, because then there's no tail, so it was strong. Oh, all right. So yeah, Win under 144. LVS 16. This is more of a bearish gap on LVS. Much deeper. The lows here, 69, so it's gapping right to this prior low, but it's bearish pre-market. That's a call spread candidate. Greg's Coffee Shop got, got extended. CSS, that kind of looks like a buyout the way it's trading pre-market, but nice gap up. YouTubers asking about NLOC. So some, momentum move, breakout weekly, 28.19. So it was up, now it's flat. The market's questionable, overbought, and this thing's up 4 bars, far from the 20. I just don't see any compelling anything to go long or short. The best thing I've seen right now is this. SBNY looks great. Hershey, we have, that's a long watch, breakout daily, weekly, buy setup on the monthly. NVAX has been all over the place, gapping up. Wow, that's a big old gap. Russ, can you tell me the reasons for the jump in the VIX? Yeah, definitely. The VIX measures average 30-day implied volatility of the S&P options. And so people, in times of fear, volatility rises because the price for put protections goes up. So the VIX goes up. And that's why we view it as a fear indicator. But Q's perking nicely here. Pre-market now, finally. Still got a lot of resistance here to the left. It's holding, so that's a good attribute for the bulls. But unless something's on its own page and just beautiful, then this is not a pattern to buy right now. So Yang, Chinese stocks, ETF, levered. We in our ETF trader, we're in KWeb, so the Chinese internets, and we sold half on this gap down day, and now we're trailing for the back half for a nice profit. Bob's asking about Charter. Would I do a bear call credit spread? Yeah, for Friday over last week's high. Go through your checklist. And I put the checklist in both the advisory letter and the weekly options letter over the weekend. So so just because I'm saying I like the pattern, you got to go through the checklist. All right, YouTube's asking about AYX. Your beautiful entry was over this bar now. And you even had a small continuation pattern here. It was extended, but then you had 3 red bars and a bottoming tail. It's gapping up here a little bit, 60 cents or so. It's just too overbought for us. There's no compelling pattern to go long or short AYX. I don't know what to do with that. And somebody's asking about FCell. Yeah, I like it. We actually. I like it. The stop has to be last week's low, but it could be a core trade. Look at that thing. It was $7,000. So they must have had a bunch of reverse splits. It's extended on the weekly, but it should not. This is a nice. It's not a W bottom, but here's the gap was negated. Green bar, higher lows. So I like it. If you want more of a long-term trade. Something kind of similar is this little plug. We got into this 1, 2, 3 over here, plug as a long-term trade. All right, looking at opens now. See if we have any things of concern. I see in the FANG department, Netflix selling off here a little bit. We had a call spread on this last week that expired worthless. And this 30-minute low might be a call spread again. David cost looks higher. Yeah, it sure does. What a beautiful entry right here on this gap. This gap over this green bar. Yeah, I think it might have had positive mention in Barron's, I forget. But yeah, Costco looks higher, but doesn't mean I'm going to enter it right now. Wow, markets, this dip's being bought. Can't believe the diamonds are almost filled the gap.